Alright, hello my fellow investors, it's the Intelligent Investor here, and in today's video, I'm going to be talking about my Robinhood portfolio. A lot of people have been asking me why I'm not showing my main portfolio, and the reason is because I have my Fidelity account. I usually go through it on my computer, and it usually shows my account number and stuff, and I'm not going to be showing that to everybody in YouTube because you can easily get hacked and they can steal all your money. So I'm not going to do that. I'm not that dumb. I'm working on learning how to actually do screen videos on my computer and get sound and all that stuff. I mean, I'm investing a little bit of time trying to get used to doing videos. But the best thing I can do right now is show you Robinhood. I mean, I don't have a lot invested in here, but I'm kind of showing you that even though you don't have a lot of money, especially in Robinhood, it's usually for beginners, you can actually make profits and stuff like that. So just gonna show you here real quick when I get better in editing videos and scratching off stuff and blurring out things, and I'll show you my main portfolio. I mean, if you see one of my old videos in the old platform, I think it was about a few years ago, I did show my Fidelity portfolio, and that's when, I mean, I still had a decent amount of money, you know. I think I had about like $400,000 back then in Fidelity. I have a lot more now, but I promise I'll do an update video and stuff like that. So whatever. Let's start off with Robinhood. Now Robinhood, I currently have 4660. I mean, I've been down, as you see in the past month, I've been down pretty big, and people have been like, "Oh my God, are you panicking and stuff like that?" I mean, you know, I'm not. I mean, I'm actually happy that it's coming down. So before we start with anything, understand that there's likely going to be a stock market crash this year. The next 10 days are going to be insane. So keep an eye on that. There might be a stock market crash sooner or later. It's just unpredictable, but it's looking like there is. So just have it in the back of your mind. Be safe. And that's what I'm doing. So for me, the reason I'm not worrying about my stocks coming down is because I'm investing in stable stocks. I have here 5 stocks that I'm stable in. Stag, T-Mobile, CocaCola, Realty Income, and Apple. These stocks are the safest in a way that can be. The only risky stock I have is Stag and AT&T, but again, they're still good. Now, I know I had a lot of issues with NEO, and I said I wasn't going to invest in NEO. I'm not investing in NEO. I'm trading NEO. So I've been swing trading NEO, and I'm just been playing with people. You know, people are very emotional right now, and like they say, millennials right now are going crazy. A lot of young people are going crazy with NEO, and they're investing on it like crazy, and they don't have the knowledge to actually know why they're doing it. So I mean, I still think that NEO is a huge risk stock. But for me, I know the pattern, so I'm swing trading it and I'm just making my profits. So right now, I'm just waiting for it to hit up about 65. I mean, I missed that earlier 65, but I mean, I'm waiting for it to hit about 65, 66, trade it, come back down. I mean, keep swing trading it. You know, I understand the emotion of NEO right now. So, I mean, I'm taking advantage of that. I mean, I'm making my profits right now. So, NEO's not a stock that I'm investing in. I'm just trading it and making my swing trades. And I've been so far profitable with that. So, you know, it is what it is. But I'm going to show you the companies kind of that I'm invested in Robinhood. I mean, these same companies besides Stag, I own on my main portfolio. So these 4 companies I own, and I own Tesla in my main portfolio. I don't own it here, but I'm trying out Stag. So Stag is still a fairly good company. And all of these are dividend-paying stocks. We're just going to ignore NEO. By the way, I'm going to show you Stag. Now, Stag is a realty company, and they pay a monthly dividend. As you see, I mean, I'm not getting a big dividend. I'm getting $1.32, but I mean, it's something. I mean, I'm not up much, but the more stagnant it stays, the better for me. If the stock comes down or stays stagnant, I benefit more from it because when I get that dividend and it reinvests, then I'm getting more bang for my buck. And with a company like this, like I said, if you've seen my previous videos, this stock is a second-class realty stock. So, I mean, they buy properties that people don't really invest in, so they assure that they get that property, and they rent it out. Like, the big thing is with Amazon. They have their land where Amazon warehouses are at, and Amazon pays a rent, so they get their money. So that's why Stag is a stable company. They're going to be stable for a good while. They've been doing smart moves, and they've been very profitable. So again, like, they did have a little bad third quarter, but again, they were still profitable. The next company I have is AT&T. A lot of people don't like AT&T because they don't have assurance on AT&T. They do have one of the highest debts. They owe about 150 million, but again, that's not a problem because they still have free cash flow. They're still paying a good high dividend, and honestly, this stock is very undervalued. Looking at through all the numbers and everything, I feel like this stock is at least worth about $60, and it's really, really undervalued right now, and hopefully people catch on to that soon. But AT&T is a huge holding of mine, and I did buy at this lower price, and honestly, a dividend isn't something to like underappreciate. I don't know how to say it. It's like they have a huge dividend, you know. Its yield is 7.16, so it's really, really high. And honestly, the stock is really undervalued. So if you haven't checked it out, I honestly wouldn't have a doubt in my mind to invest into AT&T. They're looking like they're going to have a good cash flow in 2021, and they're going to pay off a huge part of their debt. And they're probably going to end up selling DirecTV and all that stuff. And I mean, they're going to start doing the right things, hopefully, these next couple of years. And they're going to start being profitable. I mean, like I said, they're one of the biggest companies in the world. And, you know, I mean, I feel like AT&T is always a must buy in my situation. It's a good retirement stock. Like I said, at this price, the dividend yield is just so high. And the free cash flow they have is honestly insane. So the next stock I'm going to talk about is CocaCola. CocaCola, again, has dropped down and has kind of stayed stagnant as well in the last couple of months. And I like that as well. Coca-Cola pays a great dividend. They've been doing it for 56, 57 plus years that they've increased their dividend. And honestly, people have issues with Coca-Cola. Again, they had that little issue of them cutting people and all that stuff, and they feel like everybody's like, oh, we need to drop them because of this and that. Honestly, Coke is a huge company. It's going to stay huge. It's been around for more than 100 years, and they're a well-known brand company. I mean, people buy their water. Coke, I mean, come on, it's Coke. I mean, I feel like it's going to be there for a really long time, and they're still going to be a giant, even though they have problems. I mean, I'm pretty sure they had problems back then in the recession and all those times, and still they've been profitable. So Coke is something that I'm just not worried about it coming down. If it comes down, I'm kind of happy because I know within the next 5-10 years, this company is going to be much more up, and the dividend is going to pay off. So Coca-Cola. Now, Realty Income is a stock that really dropped today. Now, this is a huge pullback for me, which means I'm going to invest into Realty Income. Realty Income pays a dividend. I mean, I only have 37 shares. They pay 23 cent dividends, but they pay it monthly. So honestly, that is not bad at all, you know? So for me, $8.72 just here on Robinhood, let's say if you had this amount, you getting this amount and reinvesting it monthly, it adds up at the end of the year. So, you know, at the end of the year, you're just going to keep having more, and it's just going to keep building up and building up. So, I mean, as you see right here, my recurring investment, it ended up being today. I do it every 2 weeks, and I'm only doing $10. So you guys can see that. I mean, I can easily put more, but I'm trying to make it, I'm trying to show you that people that don't have a lot of money, if you're only investing like, let's say $10 every 2 weeks, then it's still possible to get to a high point. So even though you don't have a lot of money, my goal here with Robinhood and showing you in Robinhood is that new investors investing a little bit of money can still get you a long way. And I mean, this is my goal here, to actually help mainly new investors make money and make it the best, safest way. The next stock is going to be Apple. Apple is my growth/dividend stock. I mean, Apple's just going to grow. I mean, I feel by the end of this year, it's probably going to hit up 170. I mean, even though there'll be a stock market crash, I feel like it'll still like hit about, if there's a stock market crash, I feel like at the end of the year, it could hit up to 140, between 140 and 160. So that's something I want to look into. If it drops in the stock market crash, if it hits about like 100 or 90, then I'm going to load up on it, because this is a stock that's going to be a good future growth stock. I mean, Apple's a huge company. It's constantly going to be a huge company. And in the next couple of years, they're just going to be innovating, which is going to be pretty cool. And they're just going to blow up. So I feel like this company is going to probably get up there with, you know, all the other companies. And it's just going to be, I mean, want-wise. So this stock, honestly, I feel like it's going to blow up within the next couple of years. I missed out on Apple a few times. I did jump into it and then jump out every time it made profit, and I feel like I should have just kept it. Now I'm going to keep it because I don't want to miss out on those big opportunities that I did before. I mean, I did well with Apple, but I could have done even better. I could have retired by now if I would have kept Apple these last couple of years. I mean, I made good profits, but I would have been retired by now. And I mean, I'm not going to talk about NEO, but again, like I said, even though we hit a stock market crash, if we do this year, then I'm not going to be selling any of these stocks. I'm going to actually be buying up and loading up. Like I said, I work for myself. I have my own company and everything. So I'm going to be profitable. I mean, even though we hit a stock market crash or anything like that, I'm still going to be profitable because I rely on myself to make my own money. And I do it mainly on the stock market and, you know, just a few things that I do out there. But again, like I said, if we do hit a stock market crash, all these stocks for me are safe. No matter what, these guys are still going to be paying a dividend, except NEO, like I said, everything except NEO. These are all going to be profitable. For me, after NEO hits another high, then I'm going to sell off and I'm going to be kind of done with it for now. Because again, there is a stock market crash looming if there is this year. And I want to be in these stocks because they're safer. T-Mobile drops. I mean, T-Mobile is at one of its lowest points right now. So if that one drops even more, then I'm going to load up on it. Same thing with Coke and Realty Income and Apple. Like, I mean, all these stocks besides Stag. I mean, I'm still going to load up on Stag. But T-Mobile, CocaCola, Realty Income, and Apple are my staple stocks. They're my stocks that carry my portfolio. So even though these stocks crash, then that's my opportunity to even load up even more. So for example, let's say if you had like, I mean, let's say I had $20,000 of these 4 stocks and it drops down to $10,000, then I'm not going to panic and sell. I'm going to load up again. I'm going to load up another 10,000 so I can be back at 20,000. And, you know, now I'm going to have double the stocks at the price I had before. You get what I'm saying? And then I'm going to be even getting double the dividends. So now I'm going to be reinvesting even more. And it's going to load up at a lower price. And then within 10 years, once things start to recover, you know, it could recover within a year or a few months like it did this last year. Then I'm going to have huge profits in growth and huge profits in dividends. So for me, like I said, my outlook is for the future, not for the present. I want to make quick money like everyone does, but I know when to get out and I'm satisfied when I make my profits. Like I said, NEO, a lot of people are just going crazy. They want to say that this is going to be the next Tesla. I honestly don't think it is. It has potential. Like I said, I'm going to take out a video on Tesla, but it's going to, I mean, on NEO and what it's looking, what its outlook kind of looks like. And I'll be doing that a little bit in the future because I want to kind of make sure I get all the right information. There's a lot of people out there that talk about NEO that say, you know, it's going to be the biggest next stock, the next Tesla, and you're going to become a millionaire from it. I don't know. It could be, but it might not be. I could either make you a lot of money or you can crash and burn with it and lose everything. So for me, like I said, I always have to have my safe way. And right now, because NEO is a very emotional stock, I'm swing trading it, so I'm making my money and I'm happy with it. I'm not going to keep it long term. I'm just going to swing trade it from its emotion and make my profits and be out of there. Again, like I did with Zomedica. Zomedica is at 95 cents right now. If you saw my morning or yesterday's video, or whenever I post this video, it's going to be the previous video. This Zomedica stock has made a lot of people a lot of money. And just keep an eye on it, guys. It could still blow up another $1. And as you see, the volume, 1 billion. That is insane. This stock is trading and it's trading high. And it has momentum. So just keep an eye on it. Swing trade it if you can. Day trade it if you can. And I mean, yeah, like it has potential. But understand that this one's a huge risk, huge reward. I made my profits. I jumped out. I did buy it dip again, and now it's at 95. I might sell tomorrow again to make another little swing trade. We'll see what happens. But again, only do it if you have experience. If you don't, then don't do it. But again, stocks come down. My portfolio is coming down. I don't care. These stocks are stocks that, except NEO, these stocks are stocks that I feel, and I'm very comfortable them dropping because I know the dividend is going to pay off at the end. So I mean, that's pretty much it, guys. If you guys liked the video, please like, share, and subscribe. If you have any questions, please let me know. And that's pretty much it, guys. Use the links in the description down below to actually get free stocks from these platforms if you don't use none of these platforms. So, I mean, just check it out. But please, guys, subscribe and, you know, like my videos and stuff, share them. It really does help a lot. I'm trying to grow the channel so I can actually invest more time in it. The reason I don't invest a lot of time in doing these platforms is because, I mean, I don't hit a lot of likes and a lot of views and all that stuff. And, I mean, I'm just trying to help you guys out as quickly as I can, talk to you here and give you quick information. And I mean, if it's not a lot of people, I mean, I'm just going to do a quick video so I can get the information out of there. Nothing edited, just me here talking to you on the screen and showing you from my Robinhood portfolio. That's pretty much it. But again, thank you guys for everything, and I'll see you guys next time. So peace out.